Hello, this is Yetti Esatu from Yetti Financial LLC, and I brought today attorney Howard Haley. This is our English version financial literacy session. Good afternoon, Howard.
Good
How is
afternoon,
it
Nick.
going?
Oh, so far the day is well. It's going so far. I remember that, based on our conversation we had the other day, I'm very glad that we're here to talk about the problems that members of our community have with trying to save towards retirement and how the issues they represent.
Absolutely. Yeah, that's a very important topic that we brought to our viewers and listeners, because savings and creating generational wealth is really a very big topic. And in some communities, it's like a taboo. We can't really talk about money, but that is a really one thing that we need to really pay attention and then start taking some action because of the inflation and the economy and everything else. And we all have children, and then how are we going to send them to college if we don't save today? And to save money for their college and for our retirement, there are many things that we really have to look into our lifestyle and what we wish to have in our future. But for all of that, the foundation is to have a basic understanding about how money works and work on that. But our first question or discussion is about, why is it hard to save for retirement in our community? I mean, I see it, people look at it like a bill when they start saving into the retirement account or any other account that will really generate income or interests. So there are problems that I see in here. So why do you think it is difficult?
Well, I think there are multiple causes. Some of them are systemic, some of them are cultural, some of them are societal expectations. For example, there are certain communities where you're expected to save because you're not allowed, for religious reasons, to accumulate any kind of interest. Some of them are systemic issues where, if you think back to the most recent milestone that was just passed, the Tulsa massacre, there was a community known as Black Wall Street. There were elements of the community that were so enraged by the minority community sticking to themselves and increasing their own wealth that members of the white community in Tulsa decided that they should destroy that community, and they bombed them out. They bombed the buildings, they slaughtered and massacred many people. There's a lot that happened. This was over 100 years ago. So it almost appeals that there are times in some parts of systemic issues that have happened in America's dark history, that when people of color have actually accumulated wealth, systems were created and designed to strip away the wealth or to destroy the businesses they had created. So that's a part of a systemic issue. There were redlining. People were, like today, many people build up wealth through real estate, tax avoidance through business holdings, or they build wealth through what's called old money or financial conveyance from one generation to the next generation to the next generation. Well, how do you do that when the system is designed to prevent you from being able to accumulate wealth? In my situation, one of the issues that I had was when I graduated from high school, I had good grades. I got scholarships to go to specific colleges, but the colleges that I wanted to go to, I didn't get sufficient scholarship money. So when I went to college, one of the things I did is I went to the military. I got the GI Bill money. I went to one of the schools I selected to go for a communications degree. The private schools had the specific degree, but the public schools didn't. So yes, I did my undergrad at a public school, but for law school, I went to a private school because I wanted to specialize in litigation, and I wasn't able to get that specialization at the public school. No federal student loans cover the full cost of law school at a private school. It was over $40,000 a year. So I had to choose. Either I get the specialty field I want, or I get the income or the debt relief by going to a state school, but I'm not able to learn what I need to know in the area that I want to learn. So I took the private school route. I did personal loans, I had to take private loans, because I had to be able to afford the ability to take financial stress off my plate so that I could actually focus in school. When I graduated, my other counterparts, my classmates who had financial security and generational wealth in their family, they graduated and were able to invest a majority of their salary in the market or in the real estate or wherever they wanted their money to go. So their money started growing from them right away. Whereas I graduated, saddled with a very large amount of debt. And the first 5, 8 years of my legal experience, almost all of my money went to servicing debt. So if you translate that, immediately being able to invest to 8 years to catch up, that's a 16-year window of debt servicing that I had to go through before I started accumulating anything, whereas my counterparts had a 16-year jump on me. So those are systemic issues that I think the community faces today.
Wow, that's really amazing. I mean, very interesting story, but how could today's parent could really avoid the same situation that, we went through in terms of college debt?
Well, there are a lot of plans out there. For example, most states now have the 529 plans where people can save for college and go to a state school. And some of the schools, some of the plans allow you to go across state lines, some of them don't. But there are a lot of plans similar to that. But the issue with those plans is they restrict how the family can use the money. They can only use them for an educational purpose. But what happens if the family has other financial needs? Well, that's where one of the products that you're familiar with, an IUL, definitely works in the favor of the family who's saving the money because it's a very inexpensive product. Can you tell us more about that?
Yeah, I mean, Index Universal Life, I mean, if we started for our children, since birth, it will take them a long way. The parents are contributing money into the policy only until age 18 or 23 by choice. I mean, they can stop it at 18, but most of the time they make the top dollar or the largest amount on interest if they keep it until age 23. So if they keep it, if they have that kind of a policy, it will prevent so many things. I mean, not only for the school, but the death benefit is there. We're not wishing for our children to die or unexpectedly, but it's part of it. As a professional, we have to go over everything. So the death benefit is there, terminal illness, chronic illness, critical illness, and critical injury. When it happens, the parents can withdraw or take money from the policy. That's one thing. Number two, I mean, it's just, it pays most of the time, depending on how much amount they put into this policy. This is not a bill. This is just a saving that they can put into this policy. So that amount will grow on a compound interest. In most cases, it pays off the debt of the children's college tuition. And sometimes it may not pay all of it, but as a parent, if we support half of it and then they pay the rest of it, it's a big support, a big help. So that depends, it takes one-on-one consultation, and it takes also the parents' financial status, that they, what kind of financial status they have, how much is their income, how much they can afford to put aside for their kids' college savings. So yeah, and it is 100% tax-free. So IUL is one of the fantastic and the fastest growing financial product in today's financial world that we're in.
I remember we were looking at an example, and if I may, there was an example that I saw before, a 27 or 28-year-old mother with a child under 5 years old for less than, I think if memory serves me correct, it was less than $500 a month.
Yeah.
The mother had a policy where her life was insured for in the neighborhood of, I think, $70,000 or $80,000, and the child's life was insured in the neighborhood of roughly, I think it's $55,000 or $75,000 for under $500 a month for the two policies. And I believe that if the child was under 3 years old, at the age of 18, there's almost $50,000 for within the child's policy to use for college needs at when the child reaches the college age. Does that sound about right?
Yeah, about right, because that's a big support. And then today, 7702, article number 7702 has improved in the financial service in the insurance industry. So the parents or the owner of the policy has a room of, a large amount of money that they can deposit into their savings. So that will really grow the saving account by a large amount, more than what we gave them or more than what it shows on the illustration, because
Oh, nice.
yeah, the rule has changed, and then the room is really large for the parents to dump extra money into the policy.
Oh,
So
and for those of you who don't realize what it is, an illustration is a document that the insurance company must provide, or that the agent should provide to you, that should explain all of the ins and outs of the policy, including what number or factor they use to determine the values that they're illustrating that the policy should grow to. Now, the Fed has limitations that require that you must show the maximum cost with the minimum amount of interest to be earned, so that the policy can demonstrate whether or not the policy is viable. There are policies out there that people don't understand what an illustration is supposed to show. And so it's very important that you have a relationship with the broker or the person you're speaking with, then they fully explain it to you. If you don't understand, by all means, call them, make them explain to you. And if they're not willing to explain to you, then you need to consider whether they should be entitled to have your money.
yeah, that's a good way to explain. Thank you, Howard. But how do consumers in our community find a professional financial advisor? I mean, our industry or the business is done based on trust, respect, integrity, knowledge, and reputation, and much more. So how could they really identify that professional and get help? Because in some cases, I see people in our community, in all of us, the minority communities or non-wealthy community, go to somewhere else, to get that kind of service, because there's no trust, and there is no, that trust and respect is not really there for them. So they go outside of the community and get service. So
most often people find me by word of mouth. I have a great relationship with my homeowner insurance provider, my auto insurance provider, and so the agents and the people that I speak with, as well as different clients in my law office, word of mouth is one of the best ways. But often we speak with our community leaders, and they will then refer folks to me. One of the best things we can do is, because we are members of a minority community, or multiple minority communities, whether it be Latino, whether it be Asian, whether it be Black, whether it be Indian, whether it be Jamaican, whether it be any part of the Caribbean. I mean,
Ethiopian or Eritrean.
There you go, Ethiopia, Eritrean, even the Cameroonians and sub-Saharan and African continents. We frequent the establishments and businesses within our community that are around our offices. Many times it just requires us to let the other business know we are available for these services. And most often, the people that have fewer clients don't speak to the community. So it's upon us to let the community know, A, we're available. That's one. B, that we're willing to assist them in learning what they don't know. And C, making sure they understand that we don't make or earn any money if they don't earn any money. So it's important that we explain to them what our fiduciary requirements are, and that our objective is not just for us to succeed, but it's designed to help them succeed. Because as the community grows, we all grow better. But if we don't help the community grow, what are we here for? That's the purpose. If your heart is in helping the community improve, then the community will see that that's your heart. And part of that requires us to be more active in saying what we do and how we can do it. But we also need to make sure that they don't need to be intimidated. You don't need millions to come and work with us. You don't need millions to have an insurance policy. I mean, literally a family that's got a $50,000 annual income, and that's with 2 or 3 incomes to equate to that $50,000, can find the means and the budget and a policy that works for that family. Likewise, if we've got high income earners, there are high income earners that say, well, I can't do a Roth IRA because I make way too much money, and I can't put this much in their Roth because it's not sufficient. Well, there are policies out there that are just like you described for high income earners, which allow them to put as much money as they want into their policy. The guy who's making $250,000 a year, who wants to put away money and not be taxed as much, he can put it into a high income IUL and do the same thing that you're talking about, and a smaller policy can. and its effective long-term ability to distribute to his family and create generational wealth for his income. What if he's the only high income member the family's ever had? He may not even know how and whom to speak with. Well, we have a solution for that. Just give us a call.
Absolutely, Howard. That's really the right way to explain it, because everybody say, I am the community supporter, or I'm here to help the community. But I see it in some places. I mean, I could say in my community supporter, community this, community that, but you don't see the community supported or helped, because everybody say, oh, I'm the best and do it with me. No, financial product, nobody can say I'm the best. Nobody can say
That's
the
correct.
solution for you.
That
So
is correct.
yeah, in the financial product, our responsibility and obligation to all consumers, educate, show them the illustration, which is the paper that shows everything, how it runs and how it functions, whether you get this much amount, less or higher, depending on how the market perform, because you're not in the market, but it just mimic the market and it brings interest rate based on the market performance. So all of that has to be disclosed. Then you take that illustration or the paper that we give you or we discuss with you, and then shop around. Shop around has to be a free right that we have to really offer to
That's
all
correct.
our clients. But that's not what I see. That's where the trust and respect is really gone. The way I see it in my community, because if somebody say I'm the best and then such and such product is very expensive, mine is this much, things that the financial service industry could not even expect from a professional.
Right.
So those are the things that really makes somebody go from his or her community to another community and try to get service, whether that service is good enough for them or not, but they don't want to get hurt by their own people. That's one thing that I experienced with during the life insurance awareness month, or during the reviews and during the calls that I'm receiving. A community leader or community supporter, or we're here for the community, but the freedom of even shopping around is not offered. So
Right.
that is where the problem is. And I don't know how you see this really highly regulated industry. I want you to emphasize, this more, because we're not here for us. We're here for the people, to educate them every product that we have, or that we are already affiliated, or that we are appointed. You just have to disclose and just give them just like a buffet, and then it's up to them to pick and choose whichever one they want, or it's up to them to take everything that we offer them and go around and shop around. And then
If I may give an example, I did an illustration for a young lady. She's a single mom. Her daughter is now 7. Mom got a policy. I believe mom's policy is right at $850,000 policy. And mom put a $1 million policy on the daughter, because mom also had a term policy for $1 million as well. She wanted to keep that one. So at the end of a year, we received what's called a statement. And so the client came to me and she said, I'm not sure how to read this, and I need you to help me. Sure. Now, she has a master's degree. She's a very educated woman, but she was still lost in some of the numbers. And I said, it's not a problem. Bring it over, we'll look at it. We took her policy, we took the illustration, we took her statement. Do you realize that even with the high swings in the market in 2020, she still was more than 15% above what the illustration recommended could be the outcome? So with the market swings we had in early 2019 into 2020, she was believing that she should have lost money. She's like, it doesn't make sense that I earned money. How come I didn't lose money? And I said, do you remember when we had a discussion about what an index universal life policy is? She says, yes. And then the light switch came on and her eyes were like, wait a minute. This is when you were talking about when it goes down, it locks it in? Yes. And then when it goes back up, it goes up? I said, yes. She said, that's why. And I'm like, yes.
Yes.
Literally, the tears in her eyes. And she realized that the money that she put into the insurance policy wasn't lost. It didn't get squandered by the market. And that's the difference. Her 401k went down and she was terrified, but her IUL stayed going up. And now she wants to know, how can she move her money from her 401k into a vehicle like this? And so we had this discussion. And because of her age, she's not quite yet at 59 and a half. There are issues with her pulling her money in or out. But so we're looking at the numbers to see what's best for her. But her financial plan is different than what someone else is making. Her daughter's policy also increased. And that is what she wanted. That was the goal. How do I put money away so that if my daughter chooses to go to medical school or to law school or to become a psychologist, how do I have the funds to take care of that? And that was her objective. So she's putting roughly $300 a month into her daughter's $1 million policy. $300 a month for $1 million policy that gets her over $180,000 to pull for education. When her daughter hits 22, 23 to 24 years old, that means college tuition is not an issue if the daughter doesn't get a scholarship. But if the daughter gets a scholarship, then that means there's wealth being generated because mom had the foresight to put money away to take care of the daughter's future. And it didn't cost her a great deal of money. I mean, she's in the health industry field. And so mom earns more than $140,000 a year. So mom's okay financially because she owns multiple properties. She's got some real estate stuff that she's doing. So she's got a diverse portfolio. But this just augments her portfolio. So when other things have gone down, emergencies are happening at the property, she has the ability to pull the cash to fix things right away without having to worry about her principal income being harmed.
Yeah, that is really exciting because not all IULs are performing the way hers performed, because all of them are structured differently and the cost involved in it is totally different. And then people just take the word or the name IUL just at face value and they say, oh, I get IUL from here, I get IUL from there. But I did enough research and 4 to 6 IUL providers are really the one that they're really, offering or have an illustration and allocation that performs, the way it should be, or more than what the clients or the consumers are expecting. So, I mean, I've seen a lot of statements from other companies or other people or other brokers, or, it comes here and there for review. And most of them that I've seen in my community, people bringing it underperformed. And they said, oh, this is how much they told me I have, but right now I have less than what it is. So what does that mean? That means either the cost or the allocation that you have selected is totally, that's the performance.
I've seen IULs with costs as high as 5.5%, 6%.
Oh yeah.
5.5% to 6%. And the policy that I'm talking about, her cost was 1% or just at 1.1 or 1.2%. But I've seen policies where the cost has been as high as 5% that clients have brought me. And they're like, how do I transfer this out? Can I get rid of this policy? And I said, well, do you want to get rid of the policy or do you want to find out whether this is a better policy for you? And some clients want to do an exchange and change the policy. But what really was unique was this person, instead of getting rid of the other policy, created a second policy. And she's comparing them year over year. Yeah. And now she wants to, how do I get more of this policy versus that policy? And that's what we're talking about now. So yeah, I like the level of trust we have and the relationship, because now, because of her experiences, she's now introducing me to more members of the family and they want me to do more for them. So we're going to have some discussions and we're going to do some family things and we'll work it out. Yeah. It's a beautiful thing.
You have created an advocate in this transaction. So that is what a real business person or a professional will do. So you are a professional, an attorney, and a financial advisor. So it works. I mean, it complements each other. The business complements very well, just like my real estate business and financial service business. But at the end, we just want to really let everybody know we are here to educate you. We're not here to look at you just like a transaction or a number. We make sure that you understand everything and then pick and choose whichever one you like. Then the result will tell how professional we are. That's what I would
Oh,
at
and
the
you got to
end.
remind folks, don't let the word education bother you. It's more of a conversation, because a lot of times people think of education, they think of a lecture. Well, it's not a lecture. We're here to have a conversation to give you the best options to know which tools are available to build the financial house that you want to live in.
Yeah, absolutely. I mean, it's a conversation, a discussion about your financial needs and your current financial status. Where the extra budget that you have, where does it fit based on different products and services that we provide? So that's basically what it is. And today, I think, I hope that you found this information useful and helpful in your financial status currently and for your future financial dreams. So Howard, is there anything that you want to say before we say goodbye to our viewers?
Well, I want to say that I'm very happy that you invited me to be here, and that, don't let fear get in the way of your future. If you are concerned about where your financial picture is, give us a call. We'll see about giving you a financial checkup and see where your status is. Now, I don't hold Series 6, so I don't do variable investments and things of that nature. I'll leave that to the financial advisors that do those kinds of things. But if you want to know whether or not you've prepared for whatever eventuality may come for our families, because life insurance is about our lives, and if you haven't prepared for if something catastrophic were to happen, do you have living benefits? How do you live through whatever your family needs to go through? Then that's what we're here to help you understand how to do. And I'm certainly open to those conversations.
Thank you so much, Howard. Just for your information, the services that we provide is life insurance, annuity, rollover 401k, self-employee 401k, solo 401k under life insurance companies, and a free consultation about any other saving credit card issues that you have, how to move this thing from one place to another, or which debt you need to pay to come out of the the debt trap that you are in right now. So lots of things about finance related we can consult with our license. But other than that, just like Howard said, if you really need a variable product, we're not the professional for a variable product, but we are saying zero is your hero. So we're just here to protect your money, show you how you can protect your money from the stock market loss, and then have a good night's sleep. Whenever the market goes up and down, it does not matter to you. I mean, to all of us who are using this tax-free products, and then annuities, indexed annuity, and other products that we use. So we're here, and if you want to call Attorney Howard Helly, you can dial 202-810-6329. If you want to dial my number is 833-938-8448, and my email is info@yettifinancial.com. Attorney Howard Helly's email address is advancedlifegoals@gmail.com. So we hope to see you next week on Thursday at the same time, and you all have a wonderful day. Thank you so much, Howard, for being here. Bye-bye.